Alright, welcome back to Only Divergences. In this video, I'm going to show you exactly what you need to look for in the coming days and weeks to identify a potential support level and therefore perfect buy level for Apple. And by the end of this video, you will know exactly what you need to do to take advantage of it. But before we start, a huge thank you and welcome to the new subscribers to this unique community of smart technical analysts and confident independent investors. If you aren't a technical analyst and don't believe in this, then this isn't for you, so do not hit that subscribe button. But for those of you who are with me on this journey, you've already seen what technical analysis can do for you in a few short weeks and how it can be your ticket to true financial freedom. So let's get to it. Today is Tuesday, September 28th, 2021. It is 2:45 p.m. here in beautiful downtown Toronto. Markets are still open, but I want to get this out right now. If you haven't already watched my previous videos on Apple where I warned about the potential downside, you can do so by clicking on the link on the top right. Now you saw the thumbnail, and I don't like wasting the time of my viewers and my loyal subscribers just to get my view time up here on YouTube. So, where could we see the bounce? What is that level? 135. But it's more complicated than that, and I intend to explain it to you easily in this quick video. Okay, so we are looking at a candlestick chart of Apple, ticker symbol AAPL, trades on NASDAQ, with exponential moving averages, the MACD indicator, the more sensitive DMI or directional movement index, and the ATR or average true range here in blue. As always, I start off with a weekly time frame to provide context. I once again point out this rather large, long-term negative divergence, which is shown by a momentum high here. That was the initial momentum high, followed by a subsequent lower momentum high here, indicating ostensibly that momentum is relatively slower than the previous thrust higher, and therefore the momentum may have shifted or diverged from price. Highs are evidenced by these discrete periods of elevated histogram in green right here. You can see here as well. But notice that even with this rather muted period of elevated green here, it wasn't very strong. We still had a big pullback in the stock because simply we had a momentum divergence. So this means that the stock should be going lower to play out this bearish momentum divergence, this weekly one that we see here. It should continue lower as it did in the previous momentum divergence. But to understand better, we need to go deeper into the daily time frame. So that's what I'm going to do. Okay. So we see not only do we have the weekly divergence, which I just pointed out, but we also have, look at this, we have a high here on the MACD, and then we have a subsequent second high here on the MACD, and it's come lower since. So we have weekly divergence and we have daily divergence. That's what I call nested divergence. So why 135? Well, right off the bat, as a technical analyst, there should be a few things that should be obvious to you. First, Apple is clearly in a trend channel. So I've already drawn the top of the trend, but take a look at this. We can draw the bottom here. Which shows support, and this was the move after. You can see this was the gap higher, the earnings gap higher, and we had support here, 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 here. Is it reasonable to expect that if we do continue lower, this would be around the area where we would want? In fact, I just want to pull this up a little bit more like this. Just like that. And so where does this support level line up to? Well, take a look. If we continue lower in the next couple days and weeks, we would get right down to 135. See? You will also notice that 135 is around the same area where the 200-day exponential moving average here in orange would line up in the next couple days or weeks if we continue lower. So if we do move lower, that is the target. That is the earliest I personally would see any material tradable potential. Now, what is interesting is that we are now back at the 100-day moving average. You can see here in green, right? This was support last week. We came down, we bounced and supported, and now we're back here again. So can we hold here? Well, to answer that question, we have to move deeper into the hourly time frame and draw some distinctions. Right off the bat, we can see that the MACD in the previous move to the 100, right here, was down here, very oversold, very extended. And it was already in its second thrust lower. This is the first thrust, this is the second thrust. Well, we can see that the current move is not like that. The hourly MACD is not oversold to the same extent. In fact, this here looks a bit more like this here. So again, we have a strong argument to say that this time the potential support at the 100-day moving average is different from last week. Now, does that mean that we're going to see a collapse tomorrow? Perhaps, but I cannot say that with enough confidence to take a new short position here, especially given the move lower we have had today. It's simply a relative risk-reward calculation, or RRR as I like to call it. In any event, this is not what matters. I am not chasing the stock lower here, and I am not interested in buying here as a potential dip because this simply does not look too optimal for me. I am happy to let this go higher if Apple wants to continue higher because this is not my trade to enter at this time. For me, the high probability RRR trade comes at 135 for the reasons that I've outlined previously. I am right now just preparing for the long, and this could take days or even longer. Right now, this market is very choppy, and at times like this, you want to have the confidence to be able to wait and hunt for the right moves. So that's all I'll state right now. You know what I'm looking for. This is a game of patience. It's a game of confidence. And when we get there, I will update and explain exactly the type of move we should expect and what we want to look for. If you've made it to the end of this video, YouTube says that you have to subscribe, so hit that button and join me. Join us! And I will see you later today with an update on the S&P 500 and the VIX. Take care.